Welcome back to Next Gen Investing. It's now time for FOMO. And so we are revisiting all things Broadcom following a phenomenal week last when we saw shares surge 24% on Friday, which then passed its market cap to over $1 trillion as they joined that elite group of stocks that are now valued at over $1 trillion, which just feels ridiculous. But this is the world we're living in, Alex. And so this morning, we're seeing another pretty nice jump that has held actually throughout today's session. This is following all of the momentum from their CEO that said AI could generate 60 to 90 billion by 2027. But I also think the most important thing that was really said on their earnings call was the fact that they believe that the growing demand for chips and AI technology will help big tech shift away from some of Nvidia's very expensive processors, which could benefit a name like, Broadcom. So that's they said was reflected in their guidance. AI revenues in particular are the bright spot of growth as they've risen from 3.8 billion last year to now over 12.8 billion in 2024. Their non-core segments have pulled back to about 20% growth, but gosh, relative to some of its peers, that's actually not bad considering they're still tracking double-digit percentage growth. And the analysts are loving this name. I think no surprise there that we're seeing lots and lots of upgrades and lots of bullish commentary. BofA calling it a surging AI opportunity. My favorite note, though, was the one that we're looking at from this morning where Bernstein said the fourth quarter earnings were decent. Decent is just, and again, I actually don't entirely disagree, but decent is just such a funny way to describe it when we've seen shares gain like 30% plus of their value in the last two sessions.
So there's a lot to explore here, and I think you just said it was Bank of America who said it's a surging AI opportunity.
Yes.
Okay? I agree with two of those words. It is surging, and it's an AI name. I don't know that you can still say it's an opportunity after it just moved 37% in two sessions. So to me, this is one of those situations where it's like a lot of these analysts were asleep at the wheel. This has clearly been one of the winners of AI this whole time. It was a bit of a stealth mover. It was in the background a little bit more. And I think now what you're seeing is it's come to the surface very, very publicly in terms of it being, forcing the acknowledgement that it's a winner. And so when I look at this, we broke these results live, Oliver Rennick and I, on Market on Close. And we're watching the transition of a company that was sort of a value, consistent, really strong relationship Apple supplier that had consistent numbers, consistent revenue stream to this hyper growth potential name. And that requires a whole new multiple. But it couldn't have happened at a better time because we also have headlines that are happening basically alongside this, basically saying Apple's trying to cut them out. And while they're working on some AI chips and stuff together, they basically said, we're also making this in-house chip to basically replace the need to work with Broadcom. And this has always been an overhang for Broadcom. But now that overhang is far overshadowed by the fact that they're going to be a key player in this AI build-out that is still being built out. And so I look at this and say, kudos to the company positioning itself and doing what good companies do, which is when one door starts to close, make sure that next one is open and you're halfway through the entrance.
Yeah, and I will say, I do feel like these projections, while I can appreciate them, all they are is projections. Like the CEO saying 60 to 90 billion dollars in revenue in AI. Sure, okay, that's a projection. And then also, I was reading this note from TD Cowen saying that they see the Broadcom could capture 50 billion of the total 90 billion opportunity by 2027, given their 70% market share in 2024. But again, that's a projection.
That is more of a market call, the second one. But the company coming out and giving you numbers, they have a legal requirement to do due diligence and give the best information that they have. They may want to paint that information as rosy, as an optimistic, and explain it the best that they can. But they can't just make numbers up and say it. Otherwise, we'd be talking about like criminal activity. And
that's
so
true. I guess
they have a fiduciary responsibility to shareholders and to the street to give real numbers. And so I'm not going to discount those numbers significantly. They might miss them, they might beat them, but those are real good faith estimates. Now, this analyst projection, they might have 50 billion by X amount of time, that's a guess.
Then that is a great distinction, because I agree. They're not just making these projections up, but I guess when it comes to AI, when we revisit all the commentary we heard into this past year, I do feel like there was all of these total addressable markets of growth. And granted, we have seen companies benefit from that, no doubt. Broadcom is one of those, but you have to then continue to grow. And that really comes down to then, can your stock continue to outperform? And that's, I think, then the major question.
The nice thing about Broadcom is it does have a really stable, strong core business. This is just kind of like, the cherry on top of the sundae. They've got a really nice sundae going for them, as they were already a massive company. Hundreds of billions of dollars. It's just this AI build out has given the street a new perspective on what they can become. And so in the context too of Nvidia starting to see a rotation out of it, don't know if this is a 2-week period that's going to happen. Don't know if this is a new prolonged trend where money's being taken out of a name like Nvidia. But that money looks for a new home. It's not just going to cash. Clearly, you look at what Tesla's doing. We promised we'd mention it. Tesla is at $460 a share. This stock was what, 220 before the election, 240, 250? I mean, it's doubled basically over the last few months. And then Broadcom, 37% in 2 sessions. I mean, these are the kind of moves that only can happen if money's coming out of somewhere like an Nvidia and looking for a new home.
And that's a great point. And also, I think that it helps that its PE ratio is lower than competitors like Nvidia. So at that point, you could say.
And it's starting to swell, and that makes sense because we're looking at this company different. That was sort of my first point, which is historically, this was not a super hyper growth company. It might be now.
It might be now, and yeah, that is definitely, I think, the argument that many are feeling like they missed the boat, which is why it's truly like a great FOMO candidate when you look at the move. I mean, now 53% this month so far, and that the majority of that happened in the last 2 trading sessions, frankly. Also, now I was revisiting the S&P 500's best and worst stocks and performance basis on the year, and this name now is number 6, which I just don't feel like it was on the radar. Now it's like a top 6 name as far as its performance.
One thing too to note with this company before we look at an example trade too is, while it's been a winner within this space, it's just now starting to see those astronomical swelling of the growth figures where Nvidia was seeing like 400% revenue growth and things like that for the last few years. I mean, in July of 2023, that third quarter of 2023, Broadcom's revenue growth was 5%. In the fourth quarter of 23, it was 4%. But now it's had 34, 43, 47, 51. It's accelerating, and the numbers are tenfold what they were the year prior. Totally different environment for investors, and I think that explains why there's so much excitement right now.
There is, and I mean, the street, you could just read, there's like 15 notes out this morning that highlight everything that we've said in so many words. So yeah, the street is loving this name, and today's price is definitely reflective of that, as we are hanging on to a nice 10.6% rally on the session. I mean, outperforming this market, frankly, shocking me when I logged in and saw this move this morning. So when we trade this name now, of course, for example purposes, I mean, we are at pretty much levels never seen before, and actually inching to just now take out that session high as we speak. So momentum is looking strong, price is looking strong, and if you're a believer in AI, you'd also say this name is poised well into 2025.
Yeah, well, I wish I could go back in the time machine and have brought this trade, when I had sent it, because the stock's already moved dramatically from that point. At the time, the stock was closer to $240 a share, and I looked at the 242.5, 247.5 call vertical expiring next Friday. So keeping it consistent, short-dated, 2-week long trade here. But now the stock's at 248. This spread's entirely in the money. So at the time, it was a $2 debit. I'm sure it's greater than that now. So maybe if you were looking at this trade in real time, you still saw upside. Maybe you'd look at like the 250, 255 for a comparable type of a trade. But debit spend is the risk. So using what we had earlier as for the illustration's purpose, a $2 debit means $200 in risk. And that $5 wide spread net of the $2 leaves $3, means you can make $300 on this. 244.5 was the break even. So goes to show these names that are on the move, they're just continuing to be on the move. Tesla moved some like $15 from when Kevin had looked at an example trade on Fast Market. Broadcom doing the same here to me, moving like $10. So got to keep your head on a swivel in these markets at the moment.
You really do. And thank goodness for Broadcom with a nice move today, because the rest of tech actually is hanging on into the green. But Nvidia, of course, is our laggard, still down about 2.4% on the session. But we will leave it there.